Welcome back, ladies and gentlemen. Now we're going to look at part 3 and 4 of A, and here we're going to do the statement of financial position, which was part 3, and then the notes. Here I'm going to be a bit of a cheat, and I'm going to go through the UNISA solution. I want you to get used to marking from their solution. So here we're going to start. Statement of financial position. It's now as at 30th of September. It's not for the year ended. It's a financial wealth concept, a position concept. Again, the name of the company or partnership, sorry. Then, let's have a look. I'm going to quickly put in a slider just so you can follow me one thing at a time. First of all, our headings. What we must do is we must have notes and rands. Then we have assets, which are broken up between non-current and current. And we're going to start off with property, plant, and equipment. We have a note, notes 2 and 3. Let's scroll down and have a quick look. Okay, so note number 3, property, plant, and equipment. This table is the same as what you did in FAC1601, ladies and gentlemen. Nice and easy. You have each type of PPE as a heading. You will then have an opening balance carrying amount 1st of October made up of cost and accumulated depreciation. All of this was given to you. Just remember the equipment was a little tricky because in there you had your 1,560 that was part of the cost. You had to take it out, right? So we had a total carrying amount of 13,280. At the beginning for land and buildings given at 19,500. Motor vehicles we had cost and accumulated depreciation giving 400. Office furniture 350, less 50 accumulated depreciation gave me 300. Yes, you can go and add up the total column once you got time. Okay. Then you had additions. You had one addition for equipment. Disposals is added in here for completeness sake, but there were no disposals. And then depreciation we did in working 2.3. We did for each of them. You can go and look that up. Equipment, there was 2,190, motor vehicles 180, office furniture 30, and then you close it off with closing balances, which are made up of cost and accumulated depreciation. Just remember, the cost is going to be for equipment, 18,280 plus 1,560 gives me 19,840. Accumulated depreciation for equipment is going to be 5,000 plus the 2,190 gives me 7,109. For your rest of your disclosure, please remember that you have to tell me that the buildings with a carrying amount have been pledged as security for the mortgage. You should also refer to the mortgage note specifically. Okay, so that's nice and easy. We can go back up, and our total carrying amount at year end, you do need to add up, is 32,721, and that will go into the statement of financial position. My suggestion is do the table, do the note for PPE, and do not do a working. Okay, do it here, right? Then we go up again, we bring that in. It was in note number 3. You put that down and you get your 32,721. Nice and easy. Carrying on, current assets were given, inventory was given at 21. Trade and other receivables, remember the gross was 16 minus the 800 allowance for credit losses. Where did I get that from? Let's quickly have a look at the question. Remember, your allowance for credit losses is not the 600, right? There was a movement. Do you recall? We worked that out, and that movement went from 600 to 800. So let's have a look for it quickly. It was under 2.3. Here we go. 2.2, apologies. The allowance for credit losses must be adjusted to 800. So we did the movement from the 600 to the 800. That movement was the statement of profit or loss side. The closing balance is therefore 800 in the statement of financial position. So 16,000 minus the 800 gives me 15,200. And yes, I have a note on that, and we'll go and look at note number 4. Then there were the prepayments. Remember the prepayments we did workings for, and that was, if we go back to where we did the workings, the prepayments, we did the workings for the prepaid expense of 62, and the prepaid advertising was 948. So that's the 948 plus the 62, 1010. I could actually just reference that over here and make sure I get my full marks by referencing to the workings. Cash and cash equivalents was my petty cash of 32. Again, it will be referenced in a note, note number 4. We will deal with note number 4 just now. I then add up total assets, 70,000. Now, ladies and gentlemen, you've probably got this figure wrong, right? You've made a mistake somewhere, unless you're having a really good day out. So, nothing wrong with rushing it, making an estimate in your head quickly and putting down a number. No one's giving you marks for adding up correctly. Then equity and liabilities. In equity and liabilities, we have two accounts, the capital and current accounts. If we go back up and we have a look at our statement of changes in equity, here's our capital account and the current accounts. I add these two up, so the current accounts were made up of 4078 plus 425, and the capital accounts were 20 and the 5,000. I add them up. Let's go and put those straight in. You can see there's the 20 and the 5, gives me a total of 25,000 capital account in equity. And the current account was 425 and 4078, being 4503. So that's nice and easy. Different, remember, from a company or a sole prop, because, well, a company or a CC, sorry, has different names for the equity. Okay, here in a partnership, you don't have share capital. Total liabilities, we will come and add that up shortly. But here we have long-term borrowings, trade and other payables. We'll go and look at all these figures in note 5 now. The current portion of long-term borrowings, so we're going to split out the long-term borrowings, current and non-current. That's the interest-bearing mortgage, and then other financial liabilities. Let's go now and have a look at note number 5. Here's note number 5, all our financial liabilities. First of all, our non-current financial liabilities, long-term borrowings, we had the mortgage. A whole bunch of disclosure. You need to tell me when it was acquired, what the interest rate is, when is the loan repayment terms, and if it's secured, and it's here secured by over land and buildings, which you referenced in note number 3. Okay, and here we had the mortgage of 10,000, which was given, and what we had to do is we had to do a transfer for a component of that to non-current. So if I go into my question, you will recall that there was some information about 4,000 of the loan being repayable during 20.2. That means 4,000 Rand needs to be transferred from non-current to current. So I'm going to take 4,000 out and put it under the current portion of long-term borrowings under current financial liabilities. Okay, and that leaves me with a non-current portion of 6,000. So that 6,000 is nice and easily done. I have my 6,000 non-current liability sorted. Okay, let's continue with note number 5. We're now doing all the current components because we finished with all the non-currents. We have trade and other payables, which was made up of creditors control that was given in the trial balance. Let's confirm it. My creditors control, there it is, 24,150. 24,150. Then my accrued expenses. Remember, we did the salaries and the interest on the mortgage. The interest on the mortgage, if you remember correctly, was the 600 that was told as the interest expense minus the 450 that was actually paid and recorded. The salaries payable that was dealt with over Where's our salaries payable? Let's quickly find it. There it is. My salaries payable was all done and dusted as a salaries expense, but here's the payable, the 69 that needs to go into the balance sheet. Okay, the statement of financial position. And then my liability for the interest of 450. We've done a working for, so that's working 2.4 and 2.5. There they are, ladies and gentlemen, the 69 and the 150, all forming part of trade and other payables. Okay, the current portion of the long-term borrowings, we took the 4,000, as said earlier, out of the non-current and put it into the current. The last thing here was the financial liabilities at fair value to profit and loss, the bank overdraft of 6,160. Okay, remember, bank overdrafts are still a financial liability. So we can go and check that all of those are in there. Trade and other payables, 24. Current portion of the long-term borrowings, 4,000. And the other financial liabilities, 6,160. Please, all reference to note number 5. The last thing we haven't looked at was note number 4, just for the current assets. Nothing to write home about here. The current assets were the trade and other receivables made up of the debtors control being the 16,020 minus the 20 credit loss that went straight against it. And then my allowance for credit losses we've already discussed. Remember, I've told you before that that's the gross minus the allowance gives me the net figure. Last up, we also had financial assets. Nothing fancy, no investments in shares, just cash and cash equivalents being petty cash, 32 Rand. Great, ladies and gentlemen, well done. I want you to make sure that you can do all of these workings from the journals to the general ledger to posting to the statements. Okay. From there, I want you to go back and try it again. But this time do away with the journals and the general ledgers and try and go straight to the 3 financial statements and the notes. It'll save a lot of time, but without the basic underlying workings, you will be in trouble, guys. Okay? So you need to know those off by heart so well that you don't even need to write them down. Thank you.